Coming up in this show, Katie has an investor minute looking at the industrial sector for investors. I'm going to take a look at the treasuries in a big picture update with the trade setup looking like it's coming soon. And we have a special, our Snapshot Lite. You sign up for free. Normally you would get our analysis on S&P 500 on a daily basis. But if you sign up right now for 1 week, we're going to give you that full daily snapshot with full analysis on the S&P 500, the NASDAQ, and the Russell. All of that fantastic work done by Matt. And then I'm going to bring you analysis on the stock market. We'll look at multiple time frame analysis and SPY. And of course, bring you our amazing market condition monitor that has over 350 symbols in there with just unbelievable information for you. And you can toggle it based on any type of trader that you are or investor. Just amazing. You'll love that.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. We've got some great stuff coming up, and I want you to go to our website to get acquainted. Sign up for our Snapshot Lite, and again, if you do that this week, you're going to also get our full daily snapshot, which looks at all of the indexes. Subscribe to our channel on YouTube, click the notification bell, and do like this video. Give it a thumbs up on X. Follow me at askSlim, and any questions you have about our analysis or anything that we provide to you, write to Matt at askSlim.com. Katie's got a great look here at the industrials.
Next is the Spider Industrial Sector ETF. XLI is also 3 months off that monthly cycle trough. It closed above the prior cycle peak last month, and this month it has plowed through the 61.8% extension. Momentum has returned to positive. Now the next levels up are the 78.6% extension at 161.22, and if I bring this down, the 100% extension is at 174.51. Over on the weekly chart, XLI is about halfway through its cycle on positive momentum. The weekly cycle timing window runs from 9:15 through 10:24. Over on the daily chart, we have cycles that are quite long, 51 bars in length. Momentum is positive. The daily cycle timing window is from 8:21 to 9:03. The target levels are the 38.2% extension at 153.81, almost there already. The 50% extension level is the next one up at 157.69. The subsequent daily cycle out here is in sync with the weekly cycle timing window, but of course weakness can develop at any time. However, this is all looking very bullish at the present time.
Big picture treasuries, there's a rally pending. I want to show that to you. Recently, we did our mid-year update to all of the markets for our members, and there was a real good look in there at the treasury market. This is kind of an addition to that because we're getting closer to the time frame that I think treasuries are going to start to move up. So this is, I think, an important analysis for traders, swing traders, even for investors as we look at this. We know that there's been a lot of talk about whether or not there are going to be any more rate cuts coming up in this year. and we haven't had rate cuts in a while, and of course there's a push to get rates down. Last time they cut rates, we saw actually the futures markets raise interest rates. So the futures markets didn't believe it was the right thing to do to cut rates, and interest rates went up. But they've been in a very, very tight range for a lot of months. And now I think actually there's a potential we're going to see a much more favorable period coming up for the Treasury market. So we're going to take a look here at the 10 years. So we'll look at the ZNs. And also we're going to look at the 10-year yields and get a sense for using that as a guide for our analysis. If I look at the charts right over here, we're going to start out by looking at the monthly chart here in ZN. So this is a great look at cycle analysis. If you're brand new to it, what we have here is cycle brackets on the bottom, and that is just a drawing tool that helps us understand the rhythms in the market. We then take those rhythms and we look at what the actual trading was in the market. And with a combination of our momentum tools and looking at the cycle shape, we get a very, very good sense for conditions of the market. You could see how the head and shoulders top formed in there on the bond market and pointed to a measurement over here, which of course was easily satisfied. And this cycle made the left shoulder, this cycle made the head, this cycle made the right shoulder. And then when this cycle low here was broken, it told us that the right shoulder was complete and that the market was susceptible to the downside. Here you could see our reversal scout showing momentum moving to the downside. It showed negative momentum here and then a flattening and then a resumption to the downside, and that was all great information. So what we have right now is the opposite. In other words, where we had this head and shoulders top being formed by these cycle rhythms, we now have a head and shoulders bottom being formed by the cycle rhythms. And it would need to get a pretty sizable rally to get a breakout. But what's important here as we look at this is that the cycle lengths are generally between 16 and 18 months. And right now over here, we're coming up into about 15 months. And that says to me that we're soon going to get some kind of a bottom in here. That means that the treasuries could have another little period where they slip to the downside, but then likely to move up. And they would have to get over the 114.20 area to get over that neckline and move up. But when I look at the shorter term information, it gives me a sense that there's a trade coming and maybe this right shoulder is just about getting ready to be done forming. So that's important to look at in here as we move on to looking at other time frames. So remember this, we have this inverted head and shoulders shape that's forming, and we have the cycle in here that is coming down towards a period where it should trough. Now these blue lines in here are give us a cycle low timing. We have a service that we look at cycle low timings. Katie does a great job at that. And you can see we're in that period of the cycle low timing. When you get there, that could be a period where you have another hard sell-off like you had right in here, or it just makes a bottom and then kind of skids sideways a little bit, as you see happened in here, and then begins to move up. So we want to keep this in mind. This really looks like an important base forming in this head and shoulders, just not 100% certain about the timing as to when that will really start to move up. But when we look at the yield chart, it's going to give us a tip-off. We'll look at that in a moment. In the meantime, here is the weekly chart in here as we look at the ZNs. Now, you can see in here that this weekly chart has a minor cycle in there that's about 1/3 the length of the dominant cycle. That's very common as we see the markets now giving you this kind of upward look right over here. Now remember, here's that big left shoulder, and here's the head that's forming, and here's the right shoulder forming. Some would call this a cup and handle, which is often a look that you get when you're forming a right shoulder. at a bottom, inverted head and shoulders. And now when I look at let's look at the harmonics on these last cycle and a half right over here, you could see that we're in this period where this consolidation happened, it dipped down, that's this minor cycle, and now we're in this rising phase. Momentum in here turned up, and it had a good rally up to the resistance in here, and now you could see our projections in here are for it to get up to this minimally this 12 15 up to about 113. So it's 112.15 up to about 113. That's a nice trade. It's not a breakout, and like we said, it needs to get over that 114.20 area in order to really give us a sense that it's breaking out. But now what we're looking at is the setup of a trade, a swing trade, or a reason to be positive for traders. So that's a look at the weekly in here, and it's setting up for an upside move. I don't know if that's going to be the move there, or if this cycle will complete out into, well, that's March of next year, before you really begin to be able to accelerate to the upside. So that's a long time period off there for the longer term traders. But what we're looking now is this analysis for swing traders, shorter term traders, for this upside trade. Now let's take a look at the daily chart in here, and this is what's very important. There are some out of phase cycles, and here again we have a minor third and a dominant, and then this blue cycle is out of phase. But you can see that they all really have influence on this market. You can see where this low came here, you can see where this low came right over here, and where all three of them were coming down, well, that's a liquidation area, and you saw the bond market come down right over there. So anytime you get all three of them coming down together, like over here, that's a period where the treasuries would fall, or whatever symbol we're looking at. When all three are rising, that's a period where you get this good size upside move. So right now we're going to get close to this period, into this period where all three will be rising. The minor cycle here, the dominant cycle here, and this one over here that always looks like it's right. That already looks like it's rising. Our issue is we don't really know if that set the low right over here, or this is going to set the low right over here. So we say which low. In the meantime, you could see it kind of floundering over here, and maybe it has another week or so before we get into this alignment when they're all going to move up. But a week from now is pretty good heads up where you might be able to have a good trade in here setting up. So I don't really know which of those lows is going to be the low. Maybe it's just a test over here. But then after that, we're going to get into this period where it's likely going to be moving to the upside. So we looked at the monthly, we looked at the daily, and I'm sorry, the monthly, the weekly, and the daily now. And we could see the monthly still setting up that inverted head and shoulders. The weekly, as we see right over here, moving up already in positive momentum. That's that reversal scout that you see right there. And the daily over here, which has negative momentum, or the choppy momentum right in there. And right over here, this is our slim ribbon PO, and this is our option bias indicator. When these turn green right over here, this will get back up to the green area where it tells you to bias your option positions to the long side. Look over here where it said bias your option positions to the short side, how good that was. So now we're looking for this to turn green. We're looking for the slim ribbon PO to turn green. Right now it's giving you a negative resumption signal. So again, we don't quite have the signal yet, but we're looking at timing, and if somebody wanted to nibble on this on either direction right now, it makes sense. But once we get a sense that this trough is in place, then we get into that next rising phase, and again, that would be positive for traders. I want to go back to that weekly chart now, and I want to look at the important 10-year yield, TNX. And on our platform, it's CGI on the Thinkorswim platform. Now, look at this. This is really important. Now, I showed you the cyclical patterns, the rhythms in the market, or what we call them, the heartbeat of the market, in the 10-year futures. This is the 10-year yield. And the 10-year yield has amazing cyclicality. As you look at that Just absolutely gorgeous. These vertical lines show you the actual lows right over here, right there, and that's where the trough of each of these cycles were made. There's a minor cycle that's pretty clear in there, and a dominant cycle. And then when you see that, and actually there's another trough in here, so I'm just going to grab it and bring it over here. And you could see where that trough set up right there. So this is the actual place the trough set, and this is the theoretical or ideal places for those troughs. So what are we looking at right now? We're looking at, well, you can see these timing lines right over here. They say, based on the momentum in yields moving to the downside and the likelihood of a decline out over here into around early September, could be late August to mid-September, that says that we're likely to get a decline in yields during that period, or a rally in futures. So that's an alignment with what we're looking at in here in the 10-year yields. It says yields are about to fall, and that is in alignment with what we're looking as treasuries rallying. The targets over here are about 42.50 down. That's 4.25 yield down to about 4.17 yield. And that would give you a nice rally in the treasury markets. Of course, you could trade treasury futures with the ZNs or the ZBs. You could trade the ETF, which is the 20-year, with the TLT. All of those are aligning very well with this analysis. And of course, our members get that analysis in either these live charts or static charts, depending on what level they're in. Let's take a look at the daily in here. So what I've done is I've projected in here. So right now we're in this pattern in here where we're looking at this cycle trough likely coming over here. But I just showed you on the weekly that that's likely to fall into around the early part of September. So that means what I could do is say, if this were to occur and we get this continued downside move in here, this would be way too early for the bottom on the weekly chart. It would likely set up another negative cycle, and this is that yield coming down to around that 4.2 area right there on the daily chart, because the weekly and the daily sync in the early September area right over there. So what I'm using is all of my information to tell me that this is likely to happen. I jump the gun in here. This is just what I believe is going to set up based on the sum of the evidence. Really, all I know so far right now is that this cycle right over here is pretty positively configured. Momentum is still positive in yield, just as it's negative in the futures. So this would then have to become negative and the futures positive for me to be able to say, yes, it's trade on. Right now it's not trade on yet, but I'm giving you the full analysis and what I'm thinking in my mind about a potential trade setup. This whole thing is about telling you about what my trade setups are and how my mind works about using all of this analysis together. And when you have a nice inverse relationship between two different symbols that we look at, that really helps with the analysis. So what the 10-year is telling me is that it's already on the weekly chart in a negative condition and negative momentum, and this bounce in here is simply against the trend. It would have taken out this high right over there, or this major 78.6% in yield if yields were going to be positive, but they really didn't do that. And you could see where it failed, and now it's getting support in that support zone. But I think we're going to end up seeing bonds rally and yields falling in here, setting up what I think is going to be this trade for traders that will give them a window of time from now, which is getting towards late July, into around we'll call it around September 1st to maybe even September 15th, where I think this window is for alongside trade in the treasury market. That really fits into the swing trader or shorter term position trader type style when we look at this. And if it starts to set up and you start to see that moving that way, then look at our two-hour charts or look at your own intraday charts and get a sense for the shorter term trades in there. That's the big picture and what I think is setting up as alongside trade in this treasury market. This is an important slide for you to look at as we move forward to our stock market analysis. This tells you about how we engage in the markets and the type of analysis we have, and of course about you using the information that we provide and the important aspect of trade ownership. You must own your own trades. Again, you can get the full daily snapshot free for 1 week. If you're already subscribed to our Snapshot Lite, or you sign up right now for Snapshot Lite, you're going to automatically get our free week of the full version, no strings attached. We're just going to send you everything. In the S&P 500, NASDAQ, Russell 2000 includes our 2-hour daily and weekly charts. It features the proprietary weekly and daily analysis that I bring to our team to provide to you. So I'm the core of that analysis, and then our team reviews that, updates it, and then brings it to you. It highlights the daily important key levels, momentum conditions, price projections, and it's designed to support your trade planning and directional bias decisions. Well, how do you get that? Go to the top of askSlim.com, top right of the page. You can see that right up over there, and click on that. You'll be getting our free S&P 500 analysis every day in our Snapshot Lite. But for 1 week, we're going to give you everything in our daily snapshot with all 3 of those indexes. You're going to find it absolutely fantastic. All right, we're going to get into the stock market. Before we do that, a little brief information. Well, very little background news that moved the markets this week. Buyers are still well in command. No entry opportunities for the bulls at all. You just have to keep paying higher prices as the indexes keep edging to the upside. Earnings were widely mixed, and some big movers in there in the widely held, Lockheed Martin, IBM, GM, all down big. And D.R. Horton, Pulte Home, in those home builders, they showed some good earnings, and Northrop Grumman, and they were up big. So, of course, we've had now a good 1/3 or so of all of the earnings reports come out, and we're going to have a lot more of that going forward. Powell, he had a speech and said nothing about interest rates. He did take heat on the Fed remodeling job, as the president was there looking at it, and that was a very interesting clip if you watch that video. And volatility remains extremely low. It's 75 days since the S&P 500 closed lower by 1% or more. That is just an amazing statistic, and that, of course, does happen in these extremely bullish markets that we have right now, and that is going on soon. And that is going, I believe, going to come to a conclusion soon, and I'll show you why as we look forward in here. Stock indexes mostly up fractionally for the week. The S&P 500 up a little bit more than the other indexes, a little over 1% to the upside, but all 4 of the major indexes to the upside this week, and that's despite some big declines we saw in IBM, which hurt the Dow, but that didn't stop it from being up on the week. Let's get into the analysis here as we look at SPY. Now, for those of you that are interested in all of the indexes and all of the futures that we cover, metals, currencies, foods, energies, crypto. Arvi does just a brilliant job of bringing you the Future Speak show on Wednesdays, and he brings full analysis of the indexes. I'm only going to look at SPY today, but do become a level 2, 3, or 4 member, and you will be able to see that show. And of course, get all of our a level 2, 3, or 4 gets all of our charts in all different varieties. Our Futures Hub is just an amazing way to see all of our charts in static level. And of course, level 4 get the live charts to put up on the TOS platform. So we're going to take a look now as we look at SPY, multiple time frame analysis. So you all know, unless you're brand new, that we are cycle analysts. We're some of the few out there that look at cycle analysis, which is essentially looking at the repeating rhythms in the market, or the heartbeat in the market, as they say. And what we do is we analyze these rhythms, add in our own proprietary indicators that help us understand momentum, plus the key support areas. Also, we look at the shapes of the cycles, and they give us a lot of information. So I'm going to blow this up so you can see here looking at the weekly chart. Some very interesting things I'm going to show you on the daily chart. So what we have is a condition in here where we have a upward turn in momentum here back in April. And for those of you that follow me, some of you know that after this, I was looking for one more test of these levels, which didn't come. And then once we got the solid upturn over here, it looked clearly like that was not correct, and the market was going to be back in its rising phase. These rising phases that we see right over here on those cycles. So we have rising phases, we have peaking phases, we have declining phases, and we have the bottoming phases. And you can see in here that the shape of those actually is much different than what you see on the bottom, which is the ideal. The top is the actual. But you could see those rhythms as they come into the market. What's interesting here, very interesting, is that this rising phase in here is uncorrected. In other words, you would expect, I would expect, that there would be a minor pullback right in here somewhere. And usually that aligns with some synchronicity with the daily chart also. And that's why we have this faint little arrow in there that you could see, which just indicates that, well, we're looking for a little pullback, and then you could see up again to higher levels is really what the highest probability is. We'll take a look at the daily chart and you can see what that looks like. So the conditions here are bullish. They have remained bullish. I'll show you our market condition monitor, and you'll see that those are bullish. So even if we got a little pullback in here, which is highly likely because the market does do that naturally, and I'll show you two other times that are similar to this, then it's very likely that higher levels will come. That would be the minor rising phase in here joining up with this cycle, which is still rising until it tells us differently, and that brings higher levels out here into maybe September, October, before it again gets into a period where the risks grow again. So that's a look at the weekly. Now, if you want to learn about cycle analysis, go to our front page, askSlim.com, go to the workshops tab, watch the free videos there, take a look at what we supply there, and they'll tell you all about our workshop there on how to learn cycle analysis. So this is a very positive condition we're looking at. Let's take a look here at the daily. So this is just super interesting. As you could see, in here we have two of our momentum indicators, actually more than that. On the bottom we have our slim ribbon PO, and we have our option bias indicator. I'll tell you about those. So here where that market turned up in April, we see that this cycle had a positive configuration. We call that a positive translation because it's translating into very bullish rhythms that we see in there. And then you could see the slim ribbon provides support, which it often does. Slim ribbon's a free indicator. You can write to team@askSlim.com and they can tell you how to put that up in Thinkorswim. It's also available on TradingView, Wealth 365 charts, Tasty Trade. Our slim ribbon is on there for free on those platforms. Here you can see how the slim ribbon was giving you resistance here as the market was moving down. And here you can see how the slim ribbon PO tells you the conditions of the market and then gives you a little hint as to when it's going to resume in momentum, as you could see right over there, as it brilliantly did so each of those times. This is our OBI, our option bias indicator. And up at the top, as you see it right over here, that says keep your option positions biased to the long side. Until it turns orange, it doesn't really give us an indicator of any kind of reversal. It would be orange over here if it got to the extreme on the upside. And with the slow upside move, it's hard to get that. Here you had the bottom warning where it turned orange right over here and said, well, there's a warning that there's a bottom coming, and that certainly did happen. So these are fantastic indicators we have. These are level 4 indicators down here, as is the reversal scout right over here. But again, the slim ribbon is free. So let's look at the structures that we're looking at in here. Here you could see a negative structure right there, and that gave us a hint that the next rally would fail, as you see right over here, as it did. And then you have these positive structures where each one of these is a higher high, higher bottom, riding the slim ribbon up, and very positive looking translations and configurations there. Again, that's those are, out of the cycle analysis vernacular, and we have a glossary that you can learn if you take the cycle analysis workshop. So what we're looking at here is a couple of projections. This level right over here we'll just call this 640. This area over here, about 646, 648, is where these are projecting up, with a possibility up here to the 100% extension of 654. That would be this continuing to the upside. And you can see those structures in there. This vertical line is essentially the actual cycle low as it occurred. I'm sorry, this one moved over. That's right there. And this one is right there. I don't know, these jump. So that's where the actual ones, these are where the ideal ones would come. And you can see they're not far off as you look at that. Now, let's look at what a positive projection would look like in here. So I'm going to draw that in here for you, and you could see this is what it would look like if it were positive. If you had continued up, got up into these resistances, and somewhere over here, these two lines are showing you the time frame for the next corrective period. These corrective periods were basically sideways. We call those extreme right-hand translations. They're swamping. In other words, the upside momentum swamps the corrective period. It doesn't let it come down. And that's what we've had happen for 1, 2, 3, 4 cycles, and maybe into the 5th cycle. And if it was this, it would look like this. And then the weekly correction that we're looking for, that right over here, would be quite shallow. As you could see, this is the highest probability based on the sum of the evidence that we're looking at. Positive cycle structure, all momentum holds, all momentum stays positive. That's what the most positive and the highest probability is of what we're looking at. Now, that probability being the highest doesn't mean it's written in stone. There's another probability, and that would be where you have a negative scenario. And this is what that would look like. This is a lower probability. I'm just going to move this down here for you can see. This would then give you a negative cycle structure. In other words, this low, 618.05, which is the cycle low here, would break. And then you'd have a period in here where it corrected. So on the weekly chart, this correction would be a little steeper, but then after that was over with, we would likely begin to move up again. This is a lower probability. You would have to get negative. You would have a negative cycle structure, and support fails. You would start to get this turn red over here. This would turn neutral or red over here on the option bias indicator. You'd get these the reversal scout rolling over negative. It would pierce below the slim ribbon. All of those things would happen, and we would begin to get this readings on our market condition monitor, which I'll show you in just a few minutes. So this is the negative scenario. Let's look at something extremely interesting. You see, the 5th cycle often brings corrections. That would be similar to the period between October of 23 and April of 24, and then April of 24 to January of 25. So keep this picture in your mind. 1, 2, 3, 4, and then the 5th cycle gives you a correction, and that's in line with this minor cycle correction here on the weekly. Now let's just look back a little bit to these other dates that I'm looking at right over here. And what I want you to see is the situation where you had, let me just go a little bit further out in here. And here you could see in this period here that I discussed, 1, 2, 3, 4, and then the 5th cycle tried to rally and failed, broke below that level, and then gave you the correction. Of course, then after that, the market went up to higher levels, which if this were the formation, that would be what I would expect. Let's go back a little bit further in here for you to see this, and blow this up here, and look at this. 1, 2, 3, 4. That starts back over here, which is in October of 23 into this April of 24 period. So again, 1, 2, 3, 4 cycles riding up the slim ribbon, exactly the same, move up to a higher high, and then go into this correction right over here. And then move up again to higher levels. So this is the fifth cycle right over there that I showed you there that had that little correction in there. And over here again, this one over here, the fifth cycle, which again, riding up the slim ribbon and then correcting right over there, minor correction there. And then the same thing we're looking at right over here in this time frame where you have 1, 2, 3, 4. So while I say this is the lower probability, I'm showing you how the cycle structures would align. And then after that, you would then get this next period out over here where you had the upward movement after a minor correction right in here, and then creating that next cycle, moving up to higher levels. So that, of course, would make this a buying opportunity, and a buying opportunity we have not had for a long period of time, because we have, as I said in the beginning of the show, 75 days of a market that has not had a 1% decline or more. So here we are right here without those projections, and this is what we're looking at, where we have positive OBI, option bias indicator, positive slim ribbon PO, which gave you an upward resumption signal right over here, positive slim ribbon that you see with this bullish support that it's giving it, and then this line over here, the positive reversal scout. All of that will give us indications of change when that change does occur, and that actually is built into our market condition monitor, which I'm going to show you right now, where we can begin to get a jump on those readings when these things start to change. So this is how we bring all of the analysis together, where we can look at the various projections as the market then does speak to us with the things that we normally look at. Let's take a look here at our market conditions monitor. This is a proprietary application available to our level 3 and 4 members. And let's just look at what we have here. So I have this tuned into the trader mode. You can have trader or time frames. And I'm looking at short term right now. So those of you that are short term traders, you're looking at, something like 1 to 3 weeks out there, maybe a little longer. And if you were looking at less than that, we would call that a near-term trader. And I could dial that one in, and I'll show you in a moment. So if you look at the way the indexes look right now, you can see that, well, they are very bullish. SPY, QQQ, IWM, DIA. And this gives you the time frames in here for the components that are built into this for this particular trader type, which is short-term trader type. Now, if you wanted to know when this changed, I could go here and I could say, well, this is very bullish. I want to know when it goes neutral. So I'm going to click on that, and then I'm going to close that. And what that's going to do is notify me on our application, desktop application, when that does turn neutral. So you could do that with these right over here. I want to know when they turn neutral, so I'm going to add those to all of these right now. Kind of wanted to save this for you to see as I do that. So, sorry. Trying to get that screen to move, and I I'm not getting it to move for some reason, so I have to examine that. Anyway, I want these all to tell me when they turn neutral, which would be a pretty good indication. You could do the same thing over here on the near term, and I have, see if I can move this out and get that bar to slide again. There we go. So if I do it on the near term, it's going to give me more indications in there. So you can see in here this bell that's set up right over there. Let me just go here, and I'm going to change this to slightly bearish right there. And I'm going to change this to neutral. So I'm going to have that tell me when it goes slightly bearish, and then tell me when it goes neutral. And I'm going to put that in for the same thing in the Dow, slightly bearish and neutral. And you see those bells came up right over there and I have it in Apple also. So the you can get these. It'll notify you and let you know when these things do change. So this is the conditions right now. We're looking at near term, and you can see IWM did turn neutral, and the Dow did turn neutral, and that's for the traders that are shorter than short term, as we call that. The near term. Let's look at the intermediate right there as we look at these indexes, and you can see in here they're all bullish and very bullish, and these are for more of like a position trader when you look at that. So position traders, this is bullish. Short term, which is like 1 to 3 or 1 to 5 weeks, are very bullish. And you can see in the near term there's some deterioration going on. Looking at that. We can also, there's 350 plus symbols in here, so you can get an idea of what I'm keeping it on short-term trader mode. And I'm clicking on this, and I'm going to show you which are the very bullish top 10 and which are the very bearish. And you can see the spider and the QQQ, IWM, all showing up in the very bullish category short term. Diamonds, there we go. VST, Wells Fargo, Schwab, Occidental, Bank of America, USO, that's the oil fund. Wow. Qualcomm, all those very bullish, Datadog, and just great information. And if you want to know when they begin to deteriorate, you just click notify and let it tell you when that's happening. What an application this is. And let's look at the ones that are very bearish right here. Kimberly-Clark, Cigna Group. Yeah, the healthcares have had problems. Accenture, the Spider Insurance ETF. Wheat, Chubb, UNG, of course, natural gas has been very weak. Intuitive Surgical, and Marsh McLennan, Lululemon, Costco. Wow, Costco has now turned very bearish. I didn't really realize that, so that is interesting. So what a great tool in here for you to see how you can get information and notified under the Market Condition Monitor. And just a great look at how the very bullish short-term conditions still remain here in the stock market as we look at that. Sign up for level 3 or 4, and you can then get this working and operating with our notification application on your computer, and then it will let you know when these changes do occur. So that's it for the stock market today. I hope you thought that information was extremely valuable. Like to present it in a way that you see all of the possibilities and what the highest probabilities are. And I think I presented that to you. If you have any questions, write to team@askSlim.com regarding what I presented. Again, go to askSlim.com to get acquainted. Sign up for Snapshot Lite this week only, and we're going to give you the full daily snapshot on all of the analysis that we have every day on the S&P 500, NASDAQ, and the Russell. On YouTube, subscribe to this channel, click the notification bell, and do like this video. Give it a thumbs up. On X, follow me at askSlim. Questions you have, write to Matt@askSlim.com. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to sit